The hell? Hi, everybody. How's it going? Creed of Crypto. I am Broke Boy Crypto. I have here with me, as always, my friend and co-host Crypto Ewok. We had a double intro there, a little double penetrate. Well, double banger action there
Easy.
for you. Welcome in. We got Valiant Low Key here tonight. Marco Marcello, DJen Moonboy, who's decided to grace us with his presence finally tonight after a week off. Welcome in, everybody. We have a big show for you tonight. We are going to talk about taking profits in the bull market. Now, this is a conversation that we've been wanting to have for a few weeks. We just neglected to do so because a lot of other news has come up here in recent weeks, but a little bit low on like the news stuff around crypto. And I think that this is something that we really need to get our teeth into. I mean, it's something you want to have a good plan for, and we want to have a long conversation about different profit-taking strategies in the bull market. However it is you want to look at it. Obviously, none of it investment advice, but your own ideas about how you want to exit this market, whether you're not even going to it all and just totally stay into it long term. And we do have a poll question up concerning that, so we'll get to that in a minute. But welcome you guys in. We got that and a whole lot more. RH's birthday today, turning the big 4-5. We'll talk about that a little bit. Pulse X, it has had tremendous strength against Pulse. We've talked about that for quite some time. But when does it actually become a problem if you are providing liquidity on that pair? Ewok and I have talked about that many times on this show. And is Pulse X just getting a little bit too strong against Pulse if you are going to keep doing that liquidity pair and earning that 10 to 15, 20% interest in ink on Pulse Chain? So we'll get into that. Got some ETH updates and a lot more. So welcome in, everybody. Ewok, how are you this evening? How are you feeling about the markets and life in general? It's the spooky season, isn't it?
It is the spooky season. Yeah, I'm feeling good. Happy birthday, Richard Hart. The markets kind of pull back a little bit, like we predicted they may cool off a little bit. Like I said before, though, that's a healthy pullback. You don't want to go too crazy all at once, because when that happens, man, it comes down as hard as it went up. So I think it's good. I think it's ideal. It's an ideal situation. Bitfinesse just brought it up here too. Thinking about the people in Florida and all the ones that have like evacuated. I know DJen Moonboy's out of town, and he went to higher ground, which is good. Thinking about those guys watching this hurricane stuff unravel, it's pretty crazy. So I hope everybody out there that's in the way stays safe, and
Yeah, rough situation for all. Seeing a lot of updates on it and stuff like that. So yeah, stay safe, guys. Get out of there if need be. Obviously, yeah, DJen Moonboy talked about his strategies with us off the air. So good evening, everybody. Stay safe if you're in the Florida, the Florida region. And yeah, let's talk a little bit about what we want to get to today. I want to tell you guys about the poll question first. So again, it is paramount right now to have a plan for what you want to do at the top of the bull market. I mean, we've talked about before. Ewok has even talked about himself, that he wishes he would have had even better plans last time around. Other people, I'm sure, have said the same thing, because when you're in the midst of the market and it's doing what it's doing, you just don't know exactly what point you're always in. And we could even say that throughout the bear market. I mean, like, there's many people who, no, I don't want to catch a falling knife. I want to get ETH at $500 or whatever. Well, ETH never saw below about 850 or something like that. Just a couple of weeks ago, it's well stored at this point, but we had everybody and their brother on our channel when Pulse was at its all-time lows saying, what are you guys even doing buying right now? I would sell everything and buy back 50% lower. Well, we've done, nearly a 2x in that time. So, I mean, that might not have been the best strategy either. So it is best to have a plan at either end of the market. So what is your bull market profit-taking strategy for the pull? We've got hodling long-term, no plan. In other words, that's kind of what I call the Molina. Frank Molina talks about like holding the Pulse X for a very long time. I don't want to put words in his mouth, but I mean, he kind of does say that. So holding long-term, no plan. If you don't have a plan for this cycle, you would choose that option. Once your portfolio hits a certain value, like a dollar value you're wanting for it to hit, that's leading the way right now at 38%. This is really going to help our conversation for later. When the token or tokens that you hold hit a specific price target you're looking for. And finally, when the bullish sentiment is too high. So you're just kind of taking the temperature of the market and kind of getting out at that time. So I'm really interested in this conversation. You and I had a semi-buzzed, semi-drunk argument about this over a fire a few weeks ago. So I'm pretty excited to get into it stone sober here this evening. So that'll be really good.
You may have to refresh my memory what we
I
were
may
actually arguing about, because
yeah. I think you were further along than I was. That was kind of
I
the
was
point. Yeah.
for sure.
I think you were in the slur stratosphere a
All
little
right,
bit. So
fair enough.
let's start out with BTC and ETH right now. So it is tanking a bit as we hit the air. I mean, as much as BTC can tank, it's down 2.5% or so on the day. And it's very weird because I just saw that the stock market actually hit a new all-time high earlier today, the S&P 500. So that is bullish kind of for markets, but Bitcoin is under 61K right now, 60.7 it looks like. ETH, as usual, looking like hell. It's at 2370, still not looking good in its ratio against BTC. We've been saying it for a while now. I think it's at about 0.39 or something at the moment, which is pretty damn bad and what we've been seeing. But yeah, market, I mean, this is short-term stuff, but market down a little bit. I'm still incredibly bullish here on Q4. We are less than a month away from the presidential election, which seems, well, thank God, really, because I'm honestly just disillusioned with all of it at this point and could care less about these political ads and stuff like that. But yeah, what's your kind of vibe about where we are with BTC and ETH's relation to BTC right now, and what we may see here in the fourth quarter, Ewok, because things might get a little spicy here soon.
Yeah, from what I'm seeing though, things have really kind of tamed down, and I think it might have something to do with the election. I hope not. I mean, I hope we see a little bit of action, but I think people might be in a little bit of a holding pattern to say, all right, what's going to happen? Who's going to get in office? Is the SEC going to change, control or change leadership anyway? I think that's quite a possibility. It seems like it's kind of just died off. The volume doesn't seem too active anymore. It just, I don't know. We're still in this same channel, just kind of doing it looks like doing the worm up and down a little bit here, along this path. And it just seems a little undecided right now. So I don't know. And ETH is even suffering worse. You did bring the ratio up, and yeah, we're at like 3.8038, I should say. And it's just kind of falling as well. So again, the lack of strength, the lack of just lack of action, I think is what's causing this, and the sheer undecidedness of what's going to happen. Pull up the S&P here, and yeah, it is a brand new all-time high. Interesting. Yep. I didn't even notice that or look at that. So and this is the weekly chart too, by the way. So some of these candles are a little smaller. You go into the daily and take a look here and see what's going on. Yeah, it's made a nice little pump today. Let's look at these. Yeah, daily. So this is bouncing off the 200 EMA, which this, I guess this is the simple moving average, the SMA. So yeah, it's a good spot to kind of bounce off of, and if we can stay in between this range, we'll be good. Again, this Ethereum's just looking weak. I don't understand it, and I think I told you a little bit ago. I had a coworker ask if he's like, I bought a bunch of Ethereum and it's just gone down. Should I sell? And my first instinct to say was, I will absolutely not, unless you think it's going to go a lot lower. But even then, it's such a risky play, because any day now things could just light and go, and that's usually how they work. You're not expecting it. It kind of lulls people to sleep. These markets will do that, get you a little complacent, and then all of a sudden, boom, takes off, as if you're waiting for something to happen, or waiting for it to go a little bit lower just to buy back in, and catches you off guard. So, just be careful. Don't get complacent. It's going to happen over time here. But again, I think it's just a cool off period for everything. We're seeing it in the pulse chain markets too. I mean, I'm sure we'll talk about that here in a minute, but just kind of happening across the board. So yeah, I think it's just part of the cycle. I really do. I think it's happened before. It happens again, and just like I said, don't get complacent.
I think your work friend is the bottom signal for the ETH BTC ratio right now.
Possibly.
Yeah, I hope so. And it is an interesting thing because, I mean, we're looking, okay, so it's October 9th. We're looking a full 2 months, like 8 weeks since we did have that huge dip down over the weekend. I remember it so well because it was such a shitty day in the markets, but just like worldwide markets were horrible. We had that Japan emergency and stuff like that. I think it was August 4th is when everything just absolutely tanked.
Yeah.
That was when ETH hit these like new kind of recent local lows against Bitcoin on that day. So we're 2 months from that and we're still hovering around that area. And it hasn't really gone below here. I think 0.038, 0.037 is right about what you can see. I mean, it kind of had some wicks and stuff like that, but it's really hung out around there. Yeah, the chart doesn't look good, but it's also just kind of like some charts in crypto, and maybe that will be one of them, just don't make a lot of sense. I mean, it's not going to look like some classical charts and stuff like that. And eventually we're just going to have to see ETH start to recover here. I mean, and who knows? I mean, we may be looking dead in the face of ETH not having the cycle that many people think. I mean, there's lots of people out there that are, Bob Lucas included, I just heard him say the other day, that are thinking with their rational mind that BTC is in for, over $200,000 or so this cycle, which maybe not be too much of a stretch, but for Ethereum, some people might put that like, oh, okay, that means $15,000, $20,000 ETH is inevitable. I don't know if that's going to be so. I mean, I think there's maybe something to it being its third cycle. Vitalik certainly hasn't been at his best lately or anything like that. So, and the rise of Solana last cycle, however shitty the blockchain may be, people are just kind of not thinking about Ethereum as much. So who knows? Maybe there's a scenario where it only tops out at 10K, 12K or something like that. But honestly, even if it does, and again, I wouldn't like that. I mean, 12, I think would be still plenty, honestly. We would be sitting pretty because of where we're leveraged at, obviously. And I think many altcoins would as well, even with ETH doing that. But maybe we need to look at, maybe we need to adjust our expectations to like ETH. If people are expecting 15 or 20K, it just may not be happening. I don't know.
Well, I don't know about that. If Bitcoin does go to 200,000, they do move together. Even at the ratio that they're at, they'll still move together because of the bonded liquidity. The Hart's Law thing that we've always kind of refer back to when things move together because they're so tightly bound with all the liquidity pairs, it's going to bring it up. Like there's no way Bitcoin can get to 200,000 and Ethereum not get to at least 15. So unless the liquidity between the two get completely pulled. So
right.
I just don't see that happening. I don't see that scenario. People may not understand how much is tied up in the Bitcoin Ethereum pair across all these exchanges and everything like that. So I don't see that at all. Like I don't see it only going to 10 or 12 if Bitcoin goes that high. I think that's a completely irrational statement.
Maybe. Well, are you telling me that I'm irrational? Because I was
Bob Lucas.
Well, it sounds like
is the one that said it, right?
No, he didn't say that about ETH. I was just wondering. No, I was just saying, like, maybe I guess not if BTC has to get to 200K, but like that's not guaranteed either. So I mean, maybe if it only gets to 125 or something like that. I guess I'm just saying that like independent of BTC, for people that are just thinking in ETH terms and thinking of 15K, 20K ETH, maybe not like assume it's going to happen so assuredly. I mean, I would love to be wrong, and it definitely feels like we're at a bottom for ETH right now, though. So
and isn't it funny though that even if people say about the 125,000 Bitcoin, it's only a 2x, man. That's it.
Right.
To me, that's crazy. Like to only hope for that, to only hope for a 2x from here. I don't know. I mean, I guess we're spoiled by the micro cap things that we know can go hundreds of X's, and people are looking and going to be happy with a 2x. But anyway,
well, haven't you heard? I mean, there's all these like Altcoin Daily. I forget what other channels I've seen lately. We'll have like a guest on, and they say you only need 0.0021 Bitcoin or something. Something like that. For what? To turn like 13 grand into 50 grand this cycle or something? I mean, I don't know what logic you really have there. But
what? And if it goes to $1 million, what is that? 210,000? Like
right?
Really?
Like who's really wrecking people? Like when you see shit like that, that's what really pisses me off on these channels that like preach, portfolio diversity, and it's like owning point whatever BTC. I'm like, man, that's what's really hurting people. Like you're guaranteeing them all these crazy gains that you may still get from this when we know, I mean, the diminishing returns are there,
Yeah. Yep.
Yeah, just kind of sucks. Yeah, but that's kind of where we're at with BTC and ETH. We'll turn the page over to Pulse Chain, which again is dipping with the market today, but we've still rallied quite a bit off the lows and feeling pretty good about that. So we've got Pulse at quad 0517 right now, Pulse X at 4029, Incentive trading at $2.18 at the moment. Hex, which the hexes have been like very volatile up and down kind of in these recent moves, which is cool. I mean, like the liquidity wise, I mean, we're seeing things really like pump up hardcore when things have been going up. So Hex has just been off the chain recently, but Hex is at 1.4 cents on Pulse, and then eHex is at 0028 right now. So that would put total Hex at what 1.7 cents or something at the moment. So we've been up over 2 cents recently. Hex itself was pushing 2 cents, I believe, the other day. Its all-time high is right around 3 cents. So it has looked really, really good lately. But yeah, what do you think? I mean, to me, this looks like a pretty much nice, healthy pullback for Pulse right now. We've run up so much recently, and I think we have a nice kind of rounded bottom. If you were able to get to the Pulse chart, we can maybe look at that for a moment, or maybe Hex 2 after that, whatever you want to do. But yeah,
I'm pulling them all up here on deck screen, right? I think I'm sharing. Yeah, I'm sharing this screen right now. So, yeah, I mean, they're all having a very similar pullback. Here's your now this is the Pulse ETH chart that we look at occasionally here. But yeah, the Hex on Pulse, the Hex on Ethereum, both having a very similar pullback, drawdown, whatever you want to call it. Again, I believe it's healthy. We haven't gone lower than this green candle here, which is fine. I think as long as it holds that support. If it doesn't hold that support, we could be down into the 1.1 cents area, or just a penny flat out. Somewhere in that range it could go if it doesn't hold here at this support level. Again, there's still a lot of, I would say, uncertainty. There's not a whole lot of volume to go based on levels and things like that, especially on this chart. It's so new. So to see how well these hold up, will be interesting. But again, we kind of needed, after all of these green candles and only, a couple red ones, you need a sizable pullback, cool off period so that it can kind of reload, get people refocused again so that it can take off. You need those ABC waves or 1, 2, 3 waves to play out and be effective to continue to go up higher. Let's take a look here at the Pulse chart. It's still forming that rounded bottom. Again, I'm not seeing any red flags with any of these pullbacks. Again, they're all very similar pattern. They're all tied very heavily together. So, again, I don't think it's really anything to worry about. We catch some of these different support levels. Incentive has gone a little bit further than the others as far as, passing the support. It could come the whole way down probably to $2.11, $2.09 in that area. If it bounces off of that, again, a healthy retrace and bounce. So, yeah, let's take a look at some of these other ones, though. Yeah, they're all doing the same thing. Hedron, Icosa, again, all a very similar. They're so tied to the Pulse chain liquidity. Yeah, it's across the board. So yeah, nothing alarming, nothing going completely off the rails or anything like that. So yeah, it's just a healthy drawback.
It's one of those healthy pullbacks after pumping, really hard over the last couple of weeks. And it is interesting because I just made a pretty nice DCA buy on, I think it was Tuesday night, or that last night was like Monday night or something like that, when we were still, I don't know, 15% or so up from here. So, it was one of those buys where it immediately starts to go back down a little bit. But it's one of those things too, where I feel like I'm playing such a game of chicken right now because, as we talk about it all the time, where this stuff can just absolutely start mooning out of nowhere And no, we're not in 2025 yet, but I mean, still, we're leading up to like a very important date for Richard Hart, not his birthday, but obviously the motion to dismiss case that the SEC filed that he's trying to get dismissed, which hopefully will happen. But even if it doesn't, it's not really that big of a deal because nobody really takes them seriously anymore. But we are heading up to these really important points, and it's like, I don't want to be caught. Like, these are still auto buy prices. Like, even honestly, as long as Pulse is under sack rate of 0001, I mean, like, I want to buy everything I can within the ecosystem still, like, no doubt about it. And as long as we're there, I want to do it. So, I mean, it sucks a little bit when you make a buy like that and you're like, oh, I'm a little bit down on it right now. Of course, you have to have the long-term thinking, but I would much rather be like, I want to get in now because I'm more afraid of it getting away from me than I am it going down at this point. Because
even being half that price, right? I mean, you're talking about sack rate. We're actually at half of sack rate. So absolutely, to back up your statement, this is still auto buy territory for sure.
Yeah.
Sorry to cut you off.
Well, no, just for anybody who, and I know that feeling, like you make a buy and then it goes down 20%. You're like, what the hell, dude? This always happens to me. Like, I get that. But you got to look at the big picture. We're in Q4 of 2024. This is Q4 of a Bitcoin halving year. Whatever. I know somebody will bitch at us for that. 2025 is when things are programmed to go crazy, very likely, throughout all of crypto. Who knows? Maybe it even pushes slightly into 2026. I mean, we are, I know, like, you've probably heard it a million times, and some people get disillusioned because they can't have that long-term view, but the train's going to be leaving the station at some point. Like, at some point, out of nowhere, you are going to get smacked in the face, and it is never coming back. And the next thing you know, you're buying, hoping for a 3x, like on this ecosystem, not on Bitcoin. Like, you're going to be at the point where it's like, okay, yeah, I think we got a little bit of legs left to stand on. Everybody's pretty bullish and stuff like that. If I waited out 6 more months, and the next thing you know, something happens where maybe we're entering a new bear market. So that's why we've been buying like maniacs basically for the last year, 2-3 years, really. Yeah. So I think it's a normal pullback. It's good to see it doing this. It's healthy. I think definitely want to scoop up some more. Did you have any kind of final thoughts on prices right now anyway?
No. And, because you mentioned it, though, the RH case, we could see some interesting bullish action leading into that, I think, as a by the rumor kind of thing. And then depending on what happens, I don't know that we'll get any kind of resolution that day. I think the judge will probably break on it and kind of take plenty of time to decide. And that would be a sell the news event, maybe. But leading up to it and anticipation of a favorable outcome could definitely trigger some bullish movement. And then we, fall right into the election right after that. So
true. I am with you 100%. We've already started to see the bullish moves. I mean, we're still 3 weeks out or so from that case, which got moved to Halloween Day, of course, at like 2 p.m. or whatever. And that's going to be so fun, man. I can't wait. We've talked about it. I can't wait to see some of the people that are making the trip and traveling and stuff like that. I'm sure there'll be video outside the courtroom or events maybe they'll have after it. That's going to be really entertaining. And I'm with you 100%. I think we continue to see this ecosystem pump into it, maybe even like especially hard in the week leading up. I don't know about after, if it'll be like a sell the news thing and we'll see it come back down, but I definitely think we're going to see continued pumpage as we get into that. So
agree.
Yeah, perfect timing, really. If you guys are enjoying the stream so far, do us a favor. We appreciate it if you hit the like button and support Real DeFi. We do this show every Wednesday night at 6:30 p.m. Eastern Standard Time. I'll tell you what, let's go to... Let's talk about this PulseX yield farming thing real quick. Since we are just talking about pricing and we know how extreme the PulseX price has been against Pulse. And there's a lot of factors that you have to take into account here. But if you want to, when you get a minute, pull up the PulseX to Pulse chart. I mean, we know it's basically just up and to the right. But we a lot have talked about the PulseX yield farm on PulseX that you can participate in. If you're not familiar with like liquidity providing or yield farming, essentially what you would do is with your total stack of Pulse chain, the Pulse token and your PulseX token, you pull them together and basically provide liquidity. So PulseX can use it for other people to make trades and things like that. And it'll be paired at the ratio that it's at currently, which I don't know exactly. Last I checked the other day, it was at about 1.7 or something like that. which is again showing how strong Pulse X is. And essentially, they'll slosh around in there while you earn the incentive token, which is why it's called the incentive token. It's an incentive for you providing liquidity. The APY of that incentive token that you have been able to earn, it's been more towards the 10% range recently. But even think back to March of this year when things were really hot in the market. I mean, it was over 20%. I mean, we were earning like 22% at one point. So it does fluctuate. I think it'll probably go higher again at some point for sure. And then you've also got another factor to factor in is the incentive token itself. What is the dollar value of it? So you're earning the incentive token. Is it 40 cents? It's been $8 before. Right now it's a little over $2. So I mean, you have that to take into account as well. But let's approach this because it also matters when you start your LPing position. When you first put in your Pulse and your Pulse X, what was the ratio? What is it now? So there's a lot of things here. This conversation, obviously, we can't give a full synopsis on like LPing in every single way. You kind of have to be a little bit familiar with it. But to you, Ewok, because I know you've been participating in this pool too, what would give you pause or wanting to just like exit your position for a little while? Is it a ratio thing, like Pulse X just running too hard? Is it the price of ink, the APY? Like what different factors would you be looking at?
Well, for me directly, sorry, man, I got something in my eye. I feel like I'm itching it, but so pardon me. But
we're gonna have to have a live on-air eye operation.
Here, so. But for me to exit, it's going to take. Well, at this point, I don't think I am. I think I'm going to have to ride out the cycle because I've ridden it up this far. If I were to exit, because I got in when it was about 3-1. So if I were to exit, I'm going to lose quite a bit of Pulse X, right? Because I've earned a lot more Pulse as the chart has gone up, as the ratio has gone up. And I think for people that are jumping in and out of this, that's probably one of the worst things that you can do. Because you have to factor in a lot of things. If you're a long-term holder and you don't really care and you're just kind of playing the odds of eventually when after the bull market happens, bear market, things will possibly calm down, go back to their original levels. For me at that time, I may consider getting out. But at this time, I don't think there's any need to take that kind of loss. While I'm earning the incentive token, which I think will continue to go up in value as well. So, for me, it's a long-term play. For those who are doing the whole ratio thing and trying to predict when ratio is going to change, it's super tough, right? I mean, you're not only playing the game of like, I'm going to try and buy low and sell high. Now you're playing a ratio that can change on a dime with one big buy. So it's extremely tough. I don't recommend playing the game. Either get in and stick in long term, or play the stable coin markets and just earn a little bit of yield if that's really what you're trying to accomplish. So I would just wait until the market comes back down after this full cycle, and hopefully gets as close back to that ratio. And if it doesn't, I don't know. I may just stay in for quite some time. I don't think it really, matters to me at this point. I'm not going to dump a whole ton. I don't really need it right now. I would rather it earn something. But again, I don't want to get out at the ratio that I'm at now, because I would lose a considerable amount of Pulse X.
So let me ask you this. Let me play devil's advocate, and I'll go to Christopher's comment in the chat here in a moment. But so you say, I don't want to pull out now, because pulling out, you never know what could happen. You never know what slipped through or whatever, But if you pulled out now, let me play devil's advocate. Basically, I'm amused at my own joke, I guess. But what if it gets worse? Okay, is what I'm saying, and not worse is a subjective term, but like what if Pulse X just continues to run? I mean, like if you would put, you could just be losing PulseX more and more and more and more, or losing PulseX more and more.
Yeah.
So yeah, it's like I remember watching a crypto coffee video about this once, and it was back whenever we were like pretty much hovering at the ratio of like 2.5 or something like that. That it was at for quite some time, like basically like between 2 and 3. And it's like, well, if you're comfortable that it's going to stay between 2 and 3 here, then we're going to be fine. Well, we're seeing crazy stuff here. And Access Alive has been on this stream before saying like, oh, I think they're going to reach parity. And, we've seen bullish tweets about PulseX from Richard Hart, like maybe indicating that could happen. I mean, that would be absolutely insane. And we would definitely be washed out of tokens at that point if it did actually reach 1-to-1, or if PulseX even like surpassed Pulse at some point.
Sure.
So it's like, well, that sounds kind of like a disastrous scenario if you'd be continuing to LP during that time. Again, there's all these other factors, like how much ink are you earning? How much is the incentive token worth? And then Fast Abdul one time at a comment made a good point to say, like, well, also, what are you doing with your incentive token? Like some people, as you mentioned, are just holding it because it's like, well, I want to see, what could be in store for this thing in the ecosystem. I have a sneaking suspicion something interesting could come. Or are you dumping it for like aggressive memes that you believe in? And are you going to be right about the memes that you dump it into? There's so many angles to this, and it's like a labyrinth. I don't know if there's a right answer, but I think for me, the big thing, like you mentioned, so you got in when it was 3-to-1. I would want to know, where did I get in at? I think that's a very important thing. Like, with most of your stack did you actually enter this at? And if it deviates way too far away from there, I would maybe want to pull it out by that time and withdraw. I had one more thing to say, but I forget what it was. So I forget what it was. So go ahead. Sorry.
No, you bring up a good point. Fast Abdul just kind of chimed in there too.
I saw that.
But yeah, what are you doing with the incentive? What are you buying something with it? Are you just holding that token? Are you reinvesting what has become offsides? That's another play as well. So if you're becoming offsides on PulseX, then you use that incentive to buy the PulseX back, right? You want to make up what you kind of lost. And that's also a possibility. Something that I think, though, will happen is one of these is going to run a little bit more than the other one. And then at the same time, when the cycle kind of turns around and we get back into bear market, and at the bottom of that bear market, things tend to usually even back out. It just completes that full cycle. So, it could also be a very good signal to you to say, all right, this might be back to the point whenever I got in the first time, that's where we're at in the cycle. So, these things will run a little bit harder. Some of them will run harder than others. But knowing that we've got two really interesting tokenomics or pumpamentals or whatever you want to call them, PulseX has the buy and burn, and then Pulse is the actual layer one. So, while one could surge higher, the other one could always come back and surpass it and go back to that other spot too. So, it could hold up stronger. Like PulseX may run harder in the bull run. PulseX may not pull back quite as far after the bull run. So there's all these things you have to consider. And yeah, the best thing to do if you're not doing something with that incentive token is probably to keep yourself at the ratio you were when you got in. That way you're not really concerned. But then again, if the incentive token runs to God knows how high, then you miss out on those gains too. So, there's just so many options. Is there a right answer? Is there a wrong answer? I don't think there really is either. I don't think there's a right or wrong. It's kind of, how do you want to play this out? Obviously maximum gains is the best way, but without a crystal ball, we have no idea.
You can't know that, and you perfectly did say exactly what I was going to say earlier. When you're DCAing and stuff like that, so it could be, like you said, maybe distributing the ink, but also with new just fiat that you're bringing into the ecosystem, you could just outweigh by what you've been losing. So I think so if you just like kind of DCA across all of them equally or something like that. So that is another way of kind of compensating maybe for any that you've lost, and make that ink that you're earning even more powerful. Christopher's comment here. Wouldn't you just LP till next cycle? Wouldn't you just LP after the next bull market? Ink is great. Am I wrong here? So Ewok kind of said that.
Yep.
Yeah, I mean, I guess you could, but with how much that ratio, I mean, we got to remember, like when this stuff launched, Pulse X was 1-4 against Pulse. I mean, it was, and when it was ratio trading, I think it was like 1-8 or something like that. But once anybody was actually able to like really trade with USD or anything like that, I mean, it was 1-4. We've seen it come like over double its power against Pulse so far. So
Bitfinesse is against pulling out. He just likes to leave it in. I think they call that soaking, but
yeah, I think they do. Yeah. Just the tip of the iceberg there. Yeah, so I'm just checking to see if there's any good comments on this.
Wesley Whips says Hex is the long-term play.
Well,
that's something else you could do with your incentive is you could buy the coin that you really, really, really like,
that's what you said
not,
earlier.
and not really care. So yeah, he did for sure.
Yeah, you could do that too. And for people that are, yield minded, of course, like Wesley, I mean, you're going to kind of look towards Hex anyway. Like maybe you're not even as interested in the LPing, which is a short term thing. I mean, you can put it in, pull it out, put it in, pull it out, over and over again all night long because, it's liquid. You can just go in and out with that. Whereas with Hex, you're kind of locking it up. You're kind of popping that baby out for 15 years and raising it to be a grown man, so to speak. So,
yep.
Yeah. Any other thoughts there? There's just so many angles. Like I love it as a topic because there's a lot of things we could talk about. And Axis, you guys should check out one of the episodes we did with Axis a while back that had a lot of LP stuff in it. He had, remember that like cool hierarchy that he had? He had that like triangle thing with like a base layer of like what he would recommend to people to be LPing in the ecosystem up to the top. And he went across Pulse X and 9-inch and the different things that are available. I would highly recommend going back and checking out. It was our last stream with Axis, probably a couple of months ago or so. Yeah, Blue Diesel says, I'm just trying to make back what I put in back when Hex was high. I've learned my lesson. You can't be stupidly loyal. I thought that was going to be about Pulse X. But yeah, you're right. You got to, I mean, we're not going to tell you what to do, but I mean, DCAing when times are tough is the only way to, I mean, sure, you could not do that and maybe reap some benefits when it comes back, but we've been like maniacally DCAing here at the lows, and Ewok's got Hex stake upon Hex stake, which is another form of DCAing, just earning that APY along the way. And when the market turns up like this, if you've got all those Hex stakes and stuff like that, which, I didn't necessarily make a priority to like get millions and millions of T shares or anything in the bear market, but some people have. Some people have them from when Hex actually launched itself. And when you see these prices turn up, when you've been earning this crazy APY with Hex along the way, I mean, you really see your portfolio blow up.
Yeah.
And that's, again, there's so much game theory. That's why like Matty Allen's show is called Game Theory Gang. I mean, maybe you only have, Hex stakes pushed out long enough that they're not even going to benefit you in this cycle. So you could say like, well, yeah, your portfolio is that high, but it's not going to benefit you now.
Then what are you worried about it for? That's
right.
my point. You shouldn't be worried about the price if you're staked out so far that it doesn't matter.
Mm-hmm.
Walk away and come back. If you're not going to do anything now and you have stuff that far out, Blue Diesel, that's great. You brought your cost basis down, and that was what we were saying is, when you DCA and you buy in high, Broke Boy did the same thing. He got in when things were pretty much topping out, but he has religiously bought in, lowered his dollar cost entry, and now it's not going to take near as much to get back to even as it would have before. So yeah, that's you did the right thing, I believe.
And I think many people did that. I mean, people talk about the Mikey guy from the movie, from the highest of stakes. I know Money Gang Crypto has talked on air about this thing's running up. It's 40 cents. I'm going to get in. I mean, like many people did that, so it is what it is. I'm happy that we have a round 2 here, though, with a whole entire ecosystem now where there's like 5 coins that you could look to go after. But not only that, but all these things that are being built on Pulse Chain as well. Like whether you like memes, whether you don't, there's just so many things happening. And I think we're just about to see like the whole thing absolutely rip here soon. So I'm feeling really, really good about it all.
Yeah.
So. Good conversation, though, on the LPing there. I think we could talk about it all day. And like you said, Ewok, it really does come down to personal preference. And so is the next topic we're going to talk about with the bull market profit-taking strategy. I mean, it has to be What are your goals? What are you trying to do? What's going to help you sleep at night? I mean, like that's got to be most important, because even if what you're doing may not be like the in a vacuum, the most optimal thing, this is what you got to do. Even if it doesn't come out to be that, you are still you. You're a human being with emotions, as much as so many of us like to think that we're mechanical and we can withstand anything and all this stuff. You may not be able to. So as stoic as you try to be, so you may just have to find out like what is going to work best for my mind investing in this market, So
yeah.
Anywho, great conversation. Appreciate all of you guys' thoughts on it. If you're enjoying the stream, hit the like. We appreciate you being here. Tweet out the show if you like. Share it with your friends, your moms, your dads, your uncles, your second cousins, whoever it may be. Let's go ahead and get to the main event. Let's talk about having a plan for the bull market. And I want to check out our poll results. I am really, really intrigued by this. So what is your bull market profit taking strategy? So the first option, well, I'll just go with what's leading the way. Leading the way at 36% of the votes so far is once my portfolio hits a certain value. Boy, I don't like that answer. That's leading the way so far. Second is actually hodling long-term, no plan. So people do not have these people, 26% do not have a plan to sell anything towards the top of this bull market. They are holding even longer, which is fine. I think like for part of your stack, that's admirable and fine. And again, it's up to you. Third place at 24%, we have when bullish sentiment is too high. So just kind of taking the temperature of the market and then scaling out. And then in last place, when token or the tokens hit a specific price, which I think I understand why that one would be last. Like you don't know specifically what it's going to get to.
Right.
And it's also kind of similar to the when my portfolio hits a certain value. So they're kind of in a way combined a little bit. But let's take an approach on this. So first off, just having a plan to begin with is a major thing that many people have not done. I know Ewok, you're a little familiar with that. You're not the only one, but just speak off first, because I know from your experience how unbelievably hard it is to sell in the midst of those euphoric feelings. Like it's one thing to buy blood in the bear market. I mean, we've if you guys have been here for the last couple of years, you're familiar with doing it. Like you earned your stripes, whatever. I honestly don't think it's that hard to do that. Like sometimes it's a little nerve wracking. Like again, am I buying that falling knife and all that stuff? But I personally don't think that is all that difficult. I think it's a different thing when everyone is feeling like, wow, this market's going to just pump forever, to be able to sell. So first off, just talk about how difficult that feeling is, Ewok.
Well, first, let me preface by saying when Hex was designed, there were many people out there talking like it could go on forever. Like it was totally against the normal cycle, right?
Yeah.
Because of how it was designed, because of how it really got people to lock up. It really got people, and we were becoming so cult-like that people were joining and getting on board with it and using the system properly at that time. And I think it could have continued. However, it only takes one or two to really dump it for those other people to say, "Oh crap, I better sell now because I don't know how far this is going to go." And then you start that snowball effect, right? So I'll preface by saying that now we know that this is just like other stuff. It's going to have its cycles, and that's not going to happen. So I think that's one of the reasons why many people like myself may have been caught off guard. The second thing that kind of caught me off guard was like you said, the complete euphoria. When you look, every couple cents that it was going up was millions, or $1 million or whatever it was for many people that had gotten in early. If they had millions of Hex, and it would go up 2-3 cents, and you're adding another million to your total over and over and over. And how many times did that happen, right? So in itself, the euphoria there was just, you're like, well, how high can this go? How crazy can this really get? And you kind of lose track of what's happening pretty quickly. The next thing is being staked out and not having the liquid to be able to really do a whole lot with. Obviously, if you time your stuff right, you are lucky enough. But if you don't, then again, you can't touch it. So, there's a lot of things to talk about. There's a lot of things to plan for when you look at trying to take some profits. So, and one of the things, I always fall back to is that monthly ladder. If you have a monthly ladder and you want to either take the profit off or the yield of that one and sell that, you have the ability. If you want to sell the whole thing, you have the ability. If the prices aren't great, then you just plop it back out to another date. So I think that gives you a lot of options, right? And you can kind of get a cycle, a lot out of a cycle if you do that. Now, as we know, some of these crazy bull markets happen within a very short period of time. So, who's to say that you're going to have enough liquid at that point if you're trying to do a ladder to capitalize on it? So there's so many options. There's so many ways to look at it, to be prepared. There's a lot of people. There you go. Murder Yoga says, I'm not selling anything until next cycle. So I think covering all bases is really your best bet, and you can kind of decide. You have a couple big stakes that you may do for 3 or 6 months, and then you have that monthly one, or you have a very large amount, or you just keep some liquid as on the side and don't take that risk. Yeah, I mean, man, there's so many ways and so many strategies. Do you wait till are we talking about how we're what kind of strategies for exit quite yet, or are we just getting into the
Well, my first question was just kind of to you, just like how
yeah
difficult it is to do that. But yeah, let's go category by category here. I want to do this. Let's break down all four of these because we got
okay
time to do it tonight, and I've been wanting
yeah
to for a while. So leading the way so far, the majority of our audience is saying once my portfolio hits a certain value, um, I will say straight up that I think that is the worst possible idea.
yeah I
Out
agree
of maybe all of these, well, the inherent problem is what if it doesn't? Okay, so if you because what you're telling me is when you say that you're saying that yes, I want to get out this market, and it's when I get to $1 million, $2 million, whatever it may happen to be. Um, that would indicate to me that you do want to get out of the market, and if you don't, you are going to be paying for it dearly. I mean, I'm not going to fault anybody who's like here for a very long time. I mean, we're going to be here for a very long time, obviously, but there's also things for your own life and lifestyle that you may want to change or upgrade a little bit along the way. And you're certainly, it's, at that point, your money, it's always your money. It's your crypto. You do whatever you want with it. But if your plan is, I do want to get some out here and it's not unless I hit this amount, I think you could really, really be in trouble. Even if you have conservative estimates, what if they don't get hit or something like that? And I think you have to be flexible with that. So I personally think while it's nice to have this goal and an idea in your mind of like clearly you're forward thinking enough to say like this is what I would need to really make a big difference in my life, and that's what I would like to get to. As I'm speaking, the percentage of it is going down. But you can have that in your mind, and that is good. It shows that you're forward thinking enough to even have a plan and all that stuff. But if you don't hit
right
it, maybe you didn't live through the last bear market or the last couple of bear markets, or have no idea what they're like, but they're not easy. And those 3-4 years, I mean, we call them 4-year cycles. It's kind of like 3.75 years of bad. You know what I mean?
not
it is
quite that bad
maybe 3.5 or something. I mean, things aren't bad right now, but I mean, if you bought the top last cycle, things are still really goddamn bad. So,
yeah
I mean, in terms of your portfolio value, even though sentiment is better, we're feeling positive right now. It is tough. So, yeah, I think that may be the worst option on the list.
yeah
Actually, I am surprised it's leading. So that's the strategy. So, cashing out when your whole portfolio hits a certain value. What do you feel about this option?
yeah I agree completely. I think you've got to because if it doesn't happen, you're just hanging on for dear life. I think what you have to do is you have to take what you've bought in for. You need to keep track of that anyway. You should always keep track of what did I put in to begin with. And I think if you're going to cash out at a certain level, I think what you need to do is you need to set a, how many X's do I want, right? First, and don't go the full, like take, so if you want 100X and that's your goal, then I think you also need to have a little bit of a goal at 50X and a little bit of goal at 25X, right? So if you're going to do it that way, or if you do want to set a certain amount, say I want to be a millionaire, whatever. Okay, well, you need to do something at 250,000 then too, and you need to do something at 500,000. Now, whether that is take 5 or 10% and get your original amount out, or whatever it may be, but you should always have a plan set so that you will get partially all. You may not get all the way, but you should get part of the way to what you think you should anyway. I mean, if you're being somewhat realistic, and you have those levels and you stick to them, then you've stuck to the plan. There's really nothing to get upset about, because it didn't go as high as I wanted, but I had a plan for when it got to a fourth of the way, and I had a plan for when it got half of the way, and a plan for 3/4 of the way. Even though it didn't get to the full plan, you were still able to capitalize something, right? And do something with it. Now, you may not become the millionaire off of your $1,000, but you were able to recoup something. So I think that's the best way to approach when it hits a certain value aspect of it.
I think so too, because at least at that point you're looking at levels, yeah, like you can maybe like have an expectation that you're going to get 100X or whatever, but yeah, maybe plan for, a, like you said, 25 or 50, or like a 30 and a 150, maybe if you think 100 is actually the median, plan for both of those. But Blue Diesel says the reason I just want to exit when I get a certain value in my portfolio is because I'm tired. It gets exhausting having to keep up with it all. I don't disagree with that. I mean, obviously we love this. So, I mean, there's certainly shitty days that you just don't care about and want to do literally anything else. And I get that, but I guess, Blue Diesel, without having like a therapy session or something like that, it might just help you to get away from it a little bit. And yeah, obviously we'll leave moon bags too. Yeah.
Yeah. Leave moon bags. And so, I think part of the problem too is being in the toxic environment of Twitter or X. And you don't really have to stay there. Like, you don't, right. If it's drama to you and negativity and it brings you down, stay away from it, man. Watch the shows that you like watching. Watch us. Watch it. If you like being here, and we try to keep it positive. We try and keep a positive light and not get involved in any of the drama. So you can still keep a pulse of what's going on. You can still kind of get the whatever, and you only have to check in once a week and keep an eye on things. You don't have to subject yourself to that other stuff. And I do agree with you. It does get tiresome. But we're all here for the reason to make money, not get involved with drama. So I do get it.
And yeah, I get Blue Diesel's sentiment for sure. I just think it's dangerous. Like, you do not want to be in the business of drawing a line in the sand, and I will only accept this, like, because it's gonna. If you think you're tired now, I mean, wait. If you draw a line in the sand like that.
Yeah.
Murder Yoga, I'm down. He wants to take the two of us for dinner in Monaco after this bull market. Appreciate it, man.
I saw that. Thank you.
Yeah. We're here to hold it down. We're not going anywhere, so I appreciate that. So there's kind of the virtues and not so much virtues of the first option there. Let's go to what is second. So this is really interesting. So I'm honestly kind of surprised by this, but the second option so far at 27% is hodling long-term, no plan to take any profits at the top of this bull market. I am holding long-term, which could mean at least 2 cycles, 3 cycles, whatever it is. So I'd like to get your thoughts on that. Like, because the way I worded that one to me, that to me is saying like, whatever my stack is in crypto, I'm doing this for 2-3 cycles, whatever it is. I'm not pulling anything out at the top of this bull market. I'm just going to let it ride. We talked about Frank Molina being like an advocate of this at the beginning of the show. And he's heavily invested in PulseX and stuff like that. I think, most people would be okay doing that with a portion of their holdings, kind of like Blue Diesel said a moment ago. And it's really up to your own life. And what I'm wondering is maybe these people who are saying this option is maybe they're not as leveraged in crypto as some of us are. Like maybe it's not such a huge part of their overall life. And maybe it's more so like the risky, I mean, anybody that's in crypto and in this ecosystem, like you have an appetite for higher risk and higher reward, obviously. But, maybe it's a smaller part. Maybe they have like their own old school investment portfolio and stocks and bonds and stuff like that. And maybe this only accounts for 20% of everything they hold. And they're like, I don't give a shit. Like this is what I believe in of the stuff I believe in crypto. I'm going to let it go long term. I'm not touching it, whatever. Maybe that's who those people are.
Or they could be young. Look at Frank. Frank's a young guy, right? He's not that much younger than me. But well, he's okay. But so for some of these guys, maybe they're in their 20s. Maybe they understand, because there aren't many people that are that young that would understand the fact that you put your money into a 401k that you can't touch for how many years, right? Maybe they understand that and say, well, this is probably better. It will probably play out better anyway. The odds are that you'll do better in the long run, and I'll continue to work for 8 years. That's 2 cycles. At this point, I would rather work for 8 years, see what it's going to pay me, instead of investing for something, in something for 40 years, and hoping that the government takes care of my money. So, or not the government, but I hope that the companies that I've invested in, are still around. So, that's another possibility. These guys could be young, and with crypto being as tech as it is, there are a lot of young guys in here that may not care to do anything for 1 or 2 cycles. So that could be some of the answers we're seeing from those guys too.
Yeah, it could be. I guess to me, it would just, because of the crazy volatility that we're now familiar with, especially in, altcoin markets and stuff like that. I feel like it would just behoove you not to, at least take some off to improve your lifestyle. But hey, to each his own. I mean, I understand it. It's better to have a plan than not, obviously.
True.
And I guess to this point, from beyond all, this could kind of go with his strategy. But he says, what about taking your initial when it doubles and leave the free until Euphoria and DCA out? I guess he probably means just leave the rest. I don't know, until Euphoria and DCA out to top and DCA for the next cycle after that in the bear market. So yeah, I've done this with meme coins, actually. If I, throw a lottery ticket on something, when it doubles or triples, I'll just take out my initial and then I put it back into Pulse or something like that. Yeah, you certainly could do this, I guess, even with the main tokens if you want to. Just to be like, okay, now, because then you feel like it depends on your risk appetite. Like when you take out your initial investment, you're paying yourself and basically just saying like, okay, I consider the rest like gravy, icing on the cake at this point. I'm going to let it ride and not worry about it anymore. And then psychologically, it is a good practice, because then psychologically you're like, I'm not worried about what this does beyond here. I took it, I paid myself, I put it into a more safe investment, whatever it may be for you. And psychologically, it definitely helps you. So I think there's definitely something to that strategy. Yeah.
Yeah. It takes a lot of stress off the table. And Blue Diesel, no, sorry, man, we're not in our 20s. Did you?
I don't think I look old. Just saying that. Anyway, I don't think Ewok does either.
Beard makes me look old, but
I wouldn't put Ewok a day over 35, probably.
Yeah, something like that.
Yeah. So that is the second strategy. So once which one was it? Hodling long term and not having a plan for this cycle. So going to the third one, this happens to be my personal favorite for bull market profit taking when when bullish sentiment seems too high. Now, that's 22% of the vote right now. Now that to me is definitely my favorite one. And this is something that we're not talking in numbers anymore. We're talking about sentiment. So you start to look around and just get like an overall vibe of the market, you know. And there's many things that you can look at here. I mean, like, you know, you think of the top of the last bull market and just some of the things that were going on. I mean, the Super Bowl had like countless crypto commercials. That would have been February of 2022. So we were actually at that point already on the way down. I mean, we were already heading like way, way down. We were 2 months out from Terra Luna actually. But you know, in the terms of hex, like people humping caskets or whatever was going on, I don't even really remember. But whatever weird stuff was going on, like all the hex religion stuff and stuff like that. I mean, things were like very, very extreme. And I mean, again, you can look all over the place for this. Like, I know Sami always talks about guys like Ty Lopez coming out of the woodwork. And again, it is always those grifter influencer types that it's like, you know what, there is something to this crypto thing. It's like, where the hell have you been for the last 3 years? You know what I mean? Like, well, I want to capitalize on dunk on people's heads, you know? And that's tough. I mean, you can't just like make it universal because we've had all these celebrities doing this over the last year. We've had like Iggy Azalea, I know Scottie Pippen's like tweeting about shit all the time. The Trump brothers are talking about stuff. There's been other like Lil Pump and all these rappers, Tekashi, all these people, Andrew Tate, whatever it may be. So you do see that stuff along the way, but I'm more talking about like mainstream. You know,
it's everywhere you look. Your taxi driver, you know, there's a lot of things, people that you really wouldn't necessarily hear it from, you start hearing from crypto, and they're asking about Dogecoin or Shiba Inu or something like that, and you just start hearing about it in the most random places, and that's a big sign for sure.
And that's why I think it's the best thing to look at. Like, and again, I know we're not talking numbers, and so many of us are number oriented and stuff, but I would want to be looking at that. And again, it's not like you're going to go all in one click, like sell everything on one day and that was the top or whatever. Like in all these scenarios, I would hope that it's, I hope it's realized like we're talking about like DCAing out the same way that you would DCA in and kind of slowly getting out of the market. But yeah, I would just want to look around, see where things are at, and then just gradually over that time, you know, looking at the pulse chart earlier, we've seen this like long rounded bottom to get out of a double bottom in the ecosystem. Those things take time. It's like a region of time. It's weeks, maybe a couple months when you're at a bottom. When you're at a top, it's probably not going to be months. I mean, like maybe 60 days, maybe 90 days of a region or something like that. But around those times is when I would want to be getting out. It's just seeing what other people are doing and how ridiculous it's getting. There is no like plain, here's the answer. It's this condition. This is when you need to get out. But to me, I would choose this over any kind of like number or target any day of the week because I just want to know the region of time that I want to get out. And I don't get me wrong. Like I have ideas in my mind of like where I would like my portfolio to be, what I know would change my life, what I would be able to do with it and stuff like that. But I want to be making the right decision towards the market, not towards what I want to happen, you know?
Another good sign is, I would say every 2 or 3 times that you find yourself taking a screenshot of your portfolio, take 10% off the top. Because you know, you yourself, you start to screenshot it and be like, wow, whether you send it to anybody or not, or just keep it for yourself. That's another good sign, because I remember when it was going up, you know, the first time, and you would see it on Twitter too, people sending screenshots of their staker app at that point. When that was floating around, and you know, because you could kind of edit out some of the things out and not really show how much you had of what you had, but it was just a total portfolio value. So, you know, when you start to see that, that's another signal. Well, these guys are talking about.
I have a question
Trump.
for you.
What's that?
Well, I have a question for you. Yeah, there's some interesting comments.
I'm not gonna. Well, I'll put it this way: it's not now. At one point, maybe, but not anymore.
Yeah, there you go. Yeah, Cardi B just launched the WAP coin. I did see that. No, here's what I want to ask you, Ewok, because maybe you don't remember, but we were talking about, like, we had this conversation over a few beers over the fire one time. You were pretty vehemently against this strategy. I'll just tell you, this is what I was pulling for when we were having beers by the fire. you were vehemently against this idea, and you were much in the camp of the next thing that we're going to get to. But yeah, I kept trying to pitch this to you. Maybe it was the way we were communicating that night. I don't know. Maybe we need better communication skills, but you were very against this sentiment idea.
Well,
Yeah.
I'm not saying it's my preference at all. I never said that. So I am kind of against it, because what I think now that you say that we were arguing, this is what we were arguing about. I kind of remember saying it's so hard to tell.
Yeah.
It's so hard to tell because it just keeps running. Like you may think that, man, this is getting crazy, and then it goes again, and, and you think, well, man, this is still getting crazy, and it goes again. Like that was, I think, what I was trying to get at. Maybe not in a very sober way, but I think that was my point, was when this stuff really starts to pop off, it's so hard to tell a top signal. I mean, the sentiment just gets crazy overall. So I think you end up, well, you can't screw yourself, but people never lost by taking profits. So, but you will kick yourself if it continues to go and go and go. And you're like, man, I could have had, it's that coulda, woulda, shoulda thing comes into play. And that's the only dangerous thing I see about that. And, again, you set levels. I think you set levels of, all right, I'll take so much now, and if it goes up again, I'll take a little bit more. And then if it goes up again, like I don't think you ever want to completely exit your bags. I think that's one of the worst things that you can do. I saw Bitfinesse say something earlier, is if you sell on a 3x and just hold it for the next cycle, when it comes back down, chances are you'll be able to buy back in. But, there is a lot of risk in that too, because you end up spending it. People that have that kind of money just sitting around the sidelines, historically, they don't put it back in. They buy a boat or buy a car or buy a house. And one thing I did hear the other day, which is a very good strategy, and I'm sorry, I'm kind of derailing this.
Yeah, you're really fucking this whole segment up.
But someone had said, if you decide to buy a house, you should take the value of that house and invest the same amount into something that's less risky, right? Stock market, S&P, invested into even the stable pool or something like that. If you buy a $500,000 house, you should put $500,000 in the stable pool and earn yield. That way you're not completely out and you haven't spent all your money on a house that you probably can't afford. You do have some on the side. And anything, if you buy a car, put that amount into a safer fund or something, a mutual fund or something that's going to earn you 6, 7, 8% interest or something like that. I thought that was a good idea. I just wanted to pass that along as well before I forgot about it.
No, it's well said. And I do understand what you're saying about, like, yeah, it's so hard to tell. Like, how would you know, like, how do you know, like, when the sentiment is the right time? And that gets to, like, what we're going to kind of sum up this with at the end, I think, which is, like, obviously you're not selling this stuff in one clip. Like, yeah, you're going to leave other portions of it for if it could go higher, get out a little bit early, if you think, it's a plan of DCAing out. So I do understand that. Let's get to the last option. And I think this is really what you were trying to preach to me that night, Ewok. So what's your plan for taking profits in a bull market? The last option at 15% is when the token or tokens, whatever it is you're looking at, hit a specific price. So I remember this is what you were primarily saying when you and I talked about this before. Like, well, and we could just use Pulse as an example, whatever it is. But if you have a certain expectation of Pulse to get to like a penny, which I know you've talked about before, which would be like a 400x or something like that from here. Mm-hmm. Having levels that you want to watch, and I'm not going to hold you to the fire and say that like your idea is like, nope, it doesn't get to a penny, I'm not selling anything, that's what I'm looking for, and anything beyond that, I'm not saying that it's that hard and fast or anything, but to have an idea of levels that you want to sell at, which to me, again, is also like tying in a very specific numeric expectation, just like the portfolio value thing that I wouldn't want to like get in the business of. I mean, I can have that in my mind and it can kind of assist me in my thinking a little bit, but I don't want to plan for like this price, that price, whatever. So I'll have you break that down. That was the least popular one. And I don't think it's because of it specifically. I think it kind of can go hand in hand with the portfolio value thing. So maybe it kind of detracted from there. But I know you were a fan of this. So how would you kind of look at this strategy?
So again, with this strategy, I think you always have to have levels. I think you have to break it down and say, well, this is my goal. But at this level, I am going to pull a little bit off. At this level, I'm going to pull a little bit more off. So, it's a very similar as a percentage kind of methodology behind it. Now, I think I could pull enough out and keep it in stable coins to time it for the next cycle. For things that you can't stake, Crispy. For me, I'm out 15 years. You all know that. I've made it clear time and time again that I have 15-year stakes. I have a ladder the whole way out monthly. So for me, I don't plan on getting out of Hex. For some of these other things that there is no way to really tie it up or lock it up other than in liquidity. I think there are certain levels where I would want to take a little bit off the top and put it aside. Like, I don't want to live on it. I want to put it aside. I want to have a nice amount in stables so that when things kind of come back around on the next cycle, I can get in hopefully for the same amount for a lot less, and then use that as profits, and be in a good position to, at that time, use the stable coins to buy back in. So I think while it would take a little bit longer, obviously, because you are waiting from the top to the bottom, you're usually waiting a good 2.5, 3 years until that happens. So you do have to be patient with it. But if you can wait it out, I think that's a pretty good strategy as well.
Yeah, I think so too. I think the thing that we're realizing, like from having a conversation on all of these 4 strategies and what I would like to wrap up with this point actually at the end, because I have another topic on it, is that you want to be doing this in waves. Like, just the way that you get into the market by DCAing, getting into the market, you're pretty much forced to DCA. You know what I mean? Because people are DCAing their paychecks. So it's like, not everybody just has like infinite fiat just sitting there. Well, if you did, you probably wouldn't even have that much interest in investing in crypto because you're already rich or whatever. But not everybody just has infinite fiat just sitting there. So you have like money coming in from whatever it is, a company you have, your job, whatever. So it's kind of a forced DCA because you just can't keep doing it. You also may have the limitations that like Coinbase puts on you or whatever else, like based on time, and like I can DCA a little bit here, but not all of it, whatever. So getting into the market's kind of forced. Getting out, I guess, like in a way, you could also say that's forced based on a thing I'm going to bring up here in a moment. But I mean, you could choose to just hit the sell button at any time. You can't just like put money into the market you don't have, So selling is something like you've got it in there. You can do it all at one time. So I think that's the thing we're coming away with is like, we want to be doing this in waves, whatever the strategy is. And that brings me to this point is about like slippage, which is something that people really need to understand. Depending upon what size of bags you have at that point, getting out of whatever token it may be. What about selling in clips and certain percentages of your portfolio, Ewok, to avoid slippage? Because if you're trying to sell these huge bags, we've seen people do this with Hex, like big whales and bag holders of all these tokens, paying incredible percentages in slippage, like making it objectively like what seems to be a horrible move. Why do they do it? Who knows? Is there a family emergency? Do they just need the cash now? Whatever it is. But explain how slippage can work and how badly that can work against you if you're just like, emergency, I just need to get out of the market, instead of really, having a plan.
So the big thing is when liquidity is a huge issue, right? We use low liquidity for massive pump. When you have low liquidity, you can get these crazy runs out. Unfortunately, when there's low liquidity, you get also massive downfalls too when a couple of people start to hit that sell button, and you do run into slippage. So to your point, yes, dollar costing out the same way you did coming in is going to save yourself a lot of money. Now, here's the other option that you have. We now have some protocols that are out there that you can put your tokens up as a loan, right? Most of them only require you to be collateralized at 110%. So the most slippage that you could actually have is 10%. Maybe better than a lot of other protocols or not protocols, a lot of other exchanges that are out there. So, it could be a very good option. Now, if it continues to run, well, then you're still in a good spot, right? This may be a strategy that people aren't really talking about at that point. If it does go down and you get under collateralized, well, you lose 10%. You may have lost that in slippage. If it continues to go up, well, then now you're over collateralized and you could probably take even more if you want to. So, there's that play too that I don't think a whole lot of people are talking about, or but there are protocols to do that with just about every RH token that there is. You can do it with Hex, you can do it with Pulse X, you can do it with Pulse and eHex. I think you can do it with all of them. So there's that option. But yes, slippage will kill you if you try and hit the sell button on a very large chunk. You're going to create the price to go against you so hard that you're going to wish you probably didn't sell, because you've got to average all that in and you're going to get a terrible price. You're not going to get what you originally wanted out of it. So, just be extremely careful of that. Sell it in small clips. Look at the slippage before you do it. Use Pateas, because it will tell you how much you're going to affect the price, what the slippage is against you. So yeah, just you got to be mindful of all that stuff.
If you can, if like the collateralization and stuff like that freaks you out and you haven't done that before, I mean, you also can't, use something like Piteus, whatever you want to call it. But like a DEX aggregator, basically. If you haven't used Piteus, it's Piteas. Some kind of DEX aggregator like that, you will see if you go to buy Pulse, sell Pulse, see the long path that it takes to get you the best possible deal. Like, you can rest assured that you're getting like the best deal on your sell, on your buy, whatever it is, when you do those market buys and sells. So that's definitely highly recommended. You want to make sure you're getting the best deal. And even though it is a DEX aggregator, you don't have to trust it at its word for that price. I mean, you can still compare. You can go to Pulse X and just use that DEX as well. You go to 9-inch, 9mm, whatever you want to, and compare and contrast things. But yeah, I think those are both very good ways of going about it. Oh yeah, there you go. I didn't see you put that in there. And then off that, this is the final point I wanted to get to. So those are different ways of selling, like DCAing out. Christopher brings up a great point. This is what you can do then after that. So to kind of complete the whole thing, like you're at the top of the bull market, you scale out or don't, based on whatever your decision is. Is there a stable coin earning protocol on Pulse Chain? Yeah, we've talked about it. I mean, recently we've talked about it over the last few weeks. They just launched these on Pulse X, like 3 weeks ago, maybe, I would say. EWOC has participated in them, where there are stable pools there now, where when you're DCAing out, if you think it's a few month-long process, you can start to put those stables, whatever it is you happen to have, whether you sold into DAI, USDC, Tether, whatever you have, you can pull whatever you've got into the stable coin pool, which takes those 3 tokens and will pay you back yield in whatever is needed of those 3 tokens. So I know you've actually been doing it, EWOC, so you can even talk more specifically, but it's one of it may be the singular best addition upgrade that we've seen to Pulse X yet. I know we've talked about a lot of them over the last few weeks, but that's going to be huge. It's huge for whales right now that may be coming into the ecosystem. I want to put stables in there, but for us, whenever we're scaling out, I mean, I can't say enough about it. I'm so glad it's there. So yeah, what are your thoughts on that?
No, I love it. I think it's a great thing. And you don't have to enter, like with a lot of your pools that you're entering, as far as entering liquidity, where you have to keep a ratio. It's not like that. You can put, $500 of DAI in, and it will eventually even out for you. To every trade that kind of happens, you'll end up with some Tether, some USDC, and some DAI. Like it'll constantly change, but you'll always have that amount in there, and you're earning yield. So there absolutely is no impermanent loss. And what happens is the fees that you earn are automatically compounded in. Like you don't ever get to see the fees. So it's not like you can just withdraw your fees that you're making like you could on Uniswap, for example, when you place a pair, right? You know, there's always that option to withdraw the fees or add them in. With this one, it just automatically compounded. So yeah, I think it's great. I think it definitely helps for people that are trying to go from one coin into another stable coin, but the liquidity may be only in DAI. So it will work its way through the DAI and then trade it into there from the pairs that we have, so that you can get into USDC if you want to, without any further slippage once you get into the to the other assets. So yeah, I think it's a great way, and I think people are earning 8 or 10% at this point.
It's pretty good,
which is darn good. Especially then you don't have to leave the ecosystem, so the money stays there. You know, it's a good way to support the ecosystem, still earn a nice percentage, and you can take some out periodically if you need to. It's so easy to remove. You know, say you have $50,000 in there and you want to remove $1,000 for something, or $2,000 or whatever. It's a great feature for PulseX. So you have to go into PulseX, and I believe you click on
liquidity.
Yeah, it's liquidity, and then there's I think it's pools then, and it's the first one there. That's the only liquidity pool I think that automatically comes up at first. So.
Yeah, it is a great tool to have. And like you said, Ewok, because many people, myself included, like, we've thought about like, okay, well, if I do scale a little bit out, at the top of the bull market and want to like park stable somewhere to earn yield, there's many, many places to do that, but they may be foreign to you. And of course, you absolutely don't want to be dealing with any middlemen of any type. Like that was really the scams of the last cycle, like Celsius and whatever the hell else. I don't even remember them all, but like stuff like that. Yeah. Where you're trading your keys in a situation like Celsius. But yeah, to keep that in the DeFi protocol that you're already familiar with and earn that yield is freaking fantastic. So I'm so glad that's been added to PulseX. So that is going to be there as well.
Yeah, and the one thing I did, like I said, I put $200 in there just to see what it was like. I just wanted to track it for a little while. It wasn't that. Now is definitely not the time to be parking stable coins in this thing,
right?
Unless you've got money. Obviously you can get much better gains throughout the cycle somewhere else. But when the time came, I wanted to know how to use it, and that is one of the things why I played with liquid loans. I did remove my loan at one point when things were really going down, because I just didn't want to take the risk. But you should always play with these things before you have to use them, so that you don't do anything foolish when the time comes. So, that's what I did. I learned it, and I think it's a great protocol. It's super easy to use. It's very straightforward. The only thing was that I couldn't figure out is where are my fees, until I started I did a spreadsheet of, okay, on this date, I have this much DAI, this much USDC, and this much Tether. On this date, I have this much, and I'm like, oh, well, it's all gone up. And I figured out the yield, and the next week it was a little bit more, and the next week it was a little bit more. So that's what I did to figure it out. That it just gets compounded right back in. So pretty cool. Yes, Richard has high yielding piggy banks everywhere, and it's it's pretty awesome. It'll only get better, I think.
So there you go. We just basically went through the whole process, 4 different profit-taking strategies. I've wanted to do this episode for a while. I'm glad it took us like 45 minutes to discuss all that. I think that was a really good conversation. So
Yeah.
I hope you guys did agree. It seemed like you did, and we both appreciate all of your comments. You guys have been freaking awesome tonight. We are really starting to see the sentiment pick up. I mean, just in like views on our channel I've been sharing with you, Ewok, are just like starting to go way up. I know other Pulse Chain content creators are saying the same thing. Subs are going up. The amount of engagement and people that we're seeing in here tonight, I'm going to assume many of these people were here throughout the bear market anyway and maybe just weren't as vocal, which I do understand. I know it's tough in those times, but just shout out some people. Murder Yoga tonight, Rob Brown, Blue Diesel, of course, Crispy, thanks for stopping in. Cody Polly, I'm familiar with you, of course. NJ Dub, DJ Moonboy, of course, Christopher, you've been awesome. Wesley Whips, Beyond All, appreciate you guys being here. Side of Spirit, Valiant Low-Key as well.
Bit Finesse.
Yeah, a lot of familiar faces too. So we do this stream every Wednesday night at 6:30 p.m. Eastern Standard Time. We are in the spooky season. There's a fun month. We got a lot of good stuff coming up. Obviously, the Richard Hart motion to dismiss on Halloween Day will be very interesting. We've got a lot of great stuff to cover. We're in a bullish time in crypto. Yeah, Bitcoin's ruining the party a little bit today. Prices are a little wee bit down, but hey, big picture, boy, the next 12 months or more are going to be freaking insane. So,
yeah. Hey, I did have one more final thought.
Yeah.
I came across a quote a couple of weeks ago that I wanted to mention to you guys, and it's pretty important. And one of the things that I forget even who said it earlier, but the quote is to be careful who you let on your ship, because they may try to sink it because they can't be the captain. So you start to see a lot of that where things pop out because they aren't in charge of what they feel they should be or whatever. They'll try to sink your ship, and just don't let that happen. I just wanted to. I know it's a kind of a cheesy quote, but there's a lot to be said about it.
It's definitely true. Yeah. Many people, I say this all the time on our show too, to kind of echo that sentiment. I mean, like, most people cannot make it through to a goal that they want to reach. Like, most people will quit, whether they're just not compelled enough by the goal they created, or they are compelled by it, but it's just too difficult and they decide to settle, and there's too many attractive kind of shiny objects right there in their life. But you guys aren't like that. We're not like that. It takes cojones to stay till the end. It really does. It's very, very difficult. And if you want something bad enough and there's a compelling enough goal for you, and the alternative is just unacceptable for you, you're just going to pursue it no matter what. So, we've got the laser eyes, and we're going to be here for the whole way. So appreciate all of you guys. We will see you right here next week. Broke Boy Crypto for Crypto Ewok right here on the Creed of Crypto live stream. See you guys.